Today, I'm up over $130,000 day trading live. And this was the trade that I took to make me over $130,000. But before we get into this trade and the day, let's talk about yesterday. Yesterday was a bad day for me. I took 3 losses and lost a good amount of money. But this trade here specifically made back all my losses and more. Leto, you were 1 for 4 in the last 2 days. How is that possible? How could you close out green? Well, let's get into it. Real quick before, if you guys recognize the background, it's different. I'm visiting family and I'm here for a little bit. So excited about that. In terms of our trading, yesterday was a hard day, not only through the charts, but through my execution. I felt I traded pretty piss poor yesterday, did a bad job, took 3 losses, which I broke my rule already because I have a rule of thumb where if I go over 2, I call the day. Did not decide to call it. The great thing with yesterday, the only upside, was that it was a half-hour day, which if you don't know what that means, essentially Mondays and Fridays, I risk half my size as I do to Tuesday, Wednesday, Thursdays. The reason I do that is because statistically through the course of my career, my best performance days are Tuesday, Wednesday, Thursday. Mondays and Fridays, I don't perform the best, and yesterday was a good example of that. In terms of yesterday, well, we came into the open with a pretty bullish bias. Referencing NQ, we ended up coming into the open with a bullish bias due to the opening range move alongside the higher time frame. Look, on the hourly time frame, looking at price coming into yesterday, we had seen a good move through price where we had taken out a significant low in this hourly wick low on NQ last Friday. And so what I was looking for price to do coming into New York Open was continue that sentiment. Well, 2 main components when it comes to identifying reversals, right? It comes to making sure that a low that was taken out is a good area of low in terms of significance, and the displacement that we get back up is a good displacive sequence. We see price do that, right? Coming into yesterday's open, we see price essentially on Friday take out a significant area of liquidity, and what do you see price do through overnight sessions coming into yesterday? Well, you see price pick up and you see price continue on forward to what we were doing earlier on. And so for me, coming into the open, as long as we got a bullish opening range move sequence, my interest was potentially going long. Now, 2 out of the 3 trades that we ended up taking were longs. 1 out of the 3 were shorts, and all 3 trades got stopped out. The very first trade here, the idea behind this trade was a entry where we ended up taking after liquidity got swept through our New York low of day. It was simply put a 1-minute gap or 1-minute break of structure where we wanted to see price come up here and engulf past this 1-minute wick high, breaking this lower high sequence and seeing price trade back up. My stop loss on this trade was this 1-minute wick low. Now, here's the thing about yesterday, referencing now. The funny thing is I went back and I journaled yesterday, but after realizing, today and having the type of trading day that we had, I could easily go back to yesterday and say this is probably one of my worst performing days of the year. Not P&L wise, because it was a half-hour day, but it was one of my worst performing days because of the fact that I took trades that I would never usually take. So for instance, for this trade, the reason this trade was so awful was because of the fact that typically within my system, what I do is I require displacement and I require a good gap for entry. We did not have a gap here, nor did we have the best displacement. Did we come up here? Did we see a break of this lower high pattern? Yes. But a break of a lower high pattern isn't the most bullish indication, or for this instance, not even worth enough taking a trade. Yet we still did. We took this trade here with the expectation of price potentially drawing back up into New York highs. I think more so what I was too interested in here was with my bullish bias. On top of that, New York swept low, so I was still interested in the fact that we could see price draw higher. However, you guys know me when it comes to our reviews and identifying and taking good trades. Whenever we take an area of liquidity, we want to see price go immediately. We did not see that happen here. We saw price retrace, and we saw price meet back down lower. However, we structured out, and for some reason, for some instance, I found interest in partaking longs here, even though price was not trading the best. And so, specifically with price here, just a bad trade overall. This was the second trade that we ended up taking. It was a 1-minute gap, go invert. The idea here, the consensus was going short after initially getting stopped out off this long. Recognition that was price could potentially draw lower. Again, another sloppy trade here, where typically I look for good displacement coming into entries, and we did not get that here. We were more so looking to take a short off a higher low sequence that was created off the low of day. This is just not the best type of entry that I would have. I will say the stop implements or the stop placements for these trades that we ended up having yesterday were not the worst. The bad part was the entry. The entry should have never been taken here. And specifically with this trade, we don't see the worst confirmation sequence coming back down. But again, we ended up creating a higher low. So you see me take a long here off one instance of a lower high being broken. And then you see me take a short here off one instance of a lower high formation, if that makes sense. We had a lower high here that we ended up forming, and you see me find interest in taking a short whilst we ended up creating a higher low. Again, just very unlike me. When I look for trades, I look for clear components. I look for a very one-sided confluence in price. This was not the case. You see me end up taking a short, and the short did not pan out the best. The third and final trade for yesterday's trading session was a 1 minute gap go long. Now this one was the worst trade out of all. Despite us getting stopped out by this Trump candle, the most frustrating aspect of this trade was I did not wait for clear cut confirmation. The easiest part to my system is waiting for confirmation. We do not end up waiting for that completely yesterday. What I end up seeing price do is come down. This 1 minute gap gets rebalanced. We see one candle displace back up, and not a candle that we're looking for price to engulf up. A simple candle where we come up here and seek a closure over, and I instantly take that trade. If you guys know me with confirmation, especially on retraces into gaps, what I want to see price do is confirm well off the gap. You want to see price displace equally or even better off the retracement and the speed that we came coming back down. We did not have that here, right? When this candle closed, we were still in this 1 minute structure, right? This 1 minute wick that we ended up forming was a 1 minute structure that we had, and you see we just had a small move back up, and that caused me to take this trade. This tells me right here that I was just sloppy yesterday. That's what that tells me. Because I've been trading the system for years. This trade that I had yesterday was pure slop from me, and my expectation for this trade was after seeing price put in the low that it did and seeking displacement back up, I was expecting continuation and higher. Now, this with yesterday was a combination of price and more so my execution. I'm at fault here, right? I took these trades. A good trader in these conditions or any type of conditions is recognizes it and adjusts for what it is. I took 3 bad trades yesterday. But again, the great thing is if you're in the Discord and you know the sizing plan right here, you go down to sizing in the Discord, you know exactly what our sizing and what our risk is per day. Yesterday happened to be a half-hour day, which means coming into today, we are 1 hour risk. Journaled that, reflected on that, simply moved on and realized that I took too many trades in bad conditions and I just poorly executed. Came in today with a lot clearer of a look. Now, coming into the open, the difference between yesterday and today starting off was that yesterday was more so, we put in a low and we saw a move. That's purely what my entire bias came off. I looked at 2 things and I was like, okay, I'm bullish. We saw a low get taken, we saw a bit of displacement, and I instantly assumed that we would see price draw up higher. Now, when it came into today, we had definitive bullish bias. Let me explain. You guys know we have YouTube videos on this as well, alongside more detailed education in the Discord. What I look for when it comes to bias is I look at 3 components: higher time frame, overnight, opening range move. Well, strictly with overnight price, if you just purely look at that for what Asia traded last night, what we end up doing through our low of day on Asia, this low that we end up sweeping and coming back up off of, is a low that we installed through yesterday's Asia low. So first things first, overnight price is clear already because we see price come down, and the low that we put in the session, the actual MSS that we get was a very clear MSS. That is a similar component that we got to yesterday. But here's what we have more of today. A, you have much more displacement coming back up. So a great thing with price, especially when it's displaced like this, is it's a good indication that price most likely wants to do what? Trade higher. And so we see price essentially come up here and we see a reversal in the market for a potential look and continuation. So for me specifically, price tells you that it has interest in potentially drawing up higher. It has interest in seeking higher arrays and violating consistent bearish PD arrays. What we also see here coming into the open is we have a definitive area of draw. Yesterday's trades, if you guys go back to yesterday, and the trades that we ended up taking, our highs were purely put off high of day. Not the worst, but we have a definitive area of draw being this previous day high, and you have a definitive area of draw of this daily gap on NQ. For ES precisely, you have these equal set of highs on price right here, which we have 2 sets of equal highs, right? One where London created through Asia, one where we created one through London, where we tapped the Asia high, equal high, and the one right before or right into New York where we see price essentially come up. We see price set another form of equal highs. So 2 sets of equal highs here that we end up seeing price come up here and putting in place. So we have clear area of buy side. On top of that, we have much more displacement coming into today's open. So you have a lot more data showcasing to you that already that, oh, we're seeing movement towards the upside. We're seeing good movement. So what I did here for the New York opening range move in order to confirm our entry was I wanted to see a clear low and the overnight low get taken. And instead of waiting and being okay with seeing price draw lower first, I wanted to see price sweep the low and sweep it fast, right? And so what you end up seeing, again, through yesterday's trade coming into the open is our first long was a long taken after initially taking out our New York lows and then seeing price essentially consolidate. Then we took a long when we didn't even see any true displacement off the low. what I wanted to see here, what was a non-negotiable for me specifically off the New York opening range, was if you were to come down and run London lows, I wanted to see price take that low out and take it, shoot back up, right? Trade right back up. And that's what you exactly see price do. And we end up entering a long here. The idea behind this long was an ES 1-minute BPR rebalance. We ended up seeing price initially come up here and invert this 1-minute bearish gap, which turned into a bullish inversion for value gap. On top of that, in the moment of us displacing and inverting past it, we created a 1-minute bullish BPR. And so what we ended up looking to do was looking to ride higher price off it, right? And again, you have more of a definitive bias through your overnight sequence, through the low that we ended up putting in through Asia, and most importantly, definitive buy-side targets and a definitive opening range move. You see the low get taken out, you don't see any rambling, you don't see price stutter, you don't see price consolidate, you see price almost immediately come right back up after putting in that low, and see price draw higher. We take the trade, go risk-free, take profit one, is based off our equal highs that we had set in place, a definitive area of draw, and then we end up seeing price come up here and essentially hit our take profit 2 in the PDH. PDH ends up realizing it at a 2.7 R. We do trail our stops and get wicked out right here, which realizes our day for a plus 2.1 R. But you could see off yesterday's 3 losses, which equaled a minus 1.5 R because each trade was a half R take. This trade right here being a 2.1 R ends up being more than the losses yesterday combined and puts you back green. So this is the importance of risk management and why I preach this so much. If you install proper risk management and you trade your system properly, you could always get out of any funk. And so it's fractal. It's on a day-to-day basis, on a week-to-week basis, on a month-to-month basis, you could always get back utilizing proper risk management and consistently believing in your system. So that's pretty much that. That's the review. Hope you guys enjoyed it. I'm gonna catch you guys in the next one.